Here we go. Hi, this is Karen Rands with the Compassionate Capitalist video blog show. And today we're going to have a really interesting trending topic that's all about what I call crowd finance. You know, everybody hears the buzzwords of crowdfunding, but there's really multiple categories of which people can raise money from the crowd, so to speak. So I call it crowd finance. And today I have a special guest, Dara Albright, Dara Albright Media. And she is she's like a go-to person for the Reg A plus community. Like, you can't even, if you're not in the space, you're like, yes, you're right. But if you're in the space, you're under a rock if you haven't heard Dara's name in that context. So I'm very happy. We're going to have a really good conversation today talking about different types of crowd finance, whether it's crowdfunding and sort of that stuff, some trends in the marketplace, Reg A plus, and then we're going to learn some new words you may not have ever heard about before. But first I want to say, hey, welcome to the show, Dara. How are you?
Hey, Karen, thanks so much for having me here. It's great to be here.
It's very good to have you here. So we actually have done a couple of these, and what prompted this was because we've stayed in touch about this whole space, but when it was first happening back in 2014, 2015, and then the Reg A plus thing came out, you know, officially, we had started to have some conversations. She'd been a speaker at a couple of events that I had gone to. And I was going back through some of my old Compassionate Capitalist radio shows, and I saw how many times we had talked about this. And I was like, wow, we haven't talked late. And a lot has happened in the last year and a half or 2 years. And of course, you know, here's my book came out. And a big part of what's in this book is helping those investors. And one of the big reasons why I wrote it was to help those people that are hearing that buzzword of crowdfunding, and they're going, I don't know, because they hear all this different stuff. Is that, what's a Kickstarter versus this? And what's this, you know, whatever, all these things. It's very, very confusing in the marketplace, and a whole bunch of stuff gets lumped into the term crowdfunding. And so the book, it strives to explain that from an investor perspective, and on which type of risk capacity. So as you evaluate where you are in your risk, your ability to invest, your amount of time you have to invest, and your risk portfolio, your risk aptitude, which type of those kinds of things would you get involved in? So this is a key show too, to actually share some of that insight. So let's get started. I want to talk about all the different sources of crowdfunding. And since you live and breathe this on a daily basis, I mean, I can give the real, you know, the basic stats on it that you've got. You know, there's really 4 types. You've got your Reg CF, which is the official equity-based of crowdfunding. All the other ones like Kickstarter and Indiegogo are not equity-based. They're reward-based or donation-based. You have interstate crowdfunding, where you can sell equity for capital. You have the variations of the Reg D 506. So the 506C is the one you can raise money from a crowd from. And it has some specific limitations on who can invest. And then you have the Reg A plus, which really has turned the marketplace on its head when it comes for larger companies that may not qualify for venture capital, but they want to raise a large amount of money. And they really, really had no other alternatives for raising capital in the past until this came out, except for, you know, reverse mergers and stuff. And so I think, and you tell me, Dara, that I think reverse mergers and that whole pink sheet thing is really a dinosaur that's being shown the door, because the Reg A plus creates a very viable capital market for companies along those lines, that they can do the same thing as growing their brand at the same time as raising capital. And I think it's just I think it's a terrific solution for companies that are in that certain space of being big enough and, you know, well enough along that they can truly maximize on the opportunity. And it's good from an investor standpoint as well. What's your thoughts about that?
Yeah, no, first of all, I completely agree with everything that you just said. And we really do need to distinguish, you know, the different parts of crowdfunding, because everyone really does lump it under just one umbrella, and they really are all different avenues. I think I look at it more as crowd finance is really the overall umbrella. You can call it crowd finance, maybe even digital finance, but really what it is, the definition, how I see it, is that you're seeing modern technology, financial technology, we call fintech, marrying new modern regulations that we call reg tech, and those two forces coming together creating new opportunities, opening up for small investors to actually participate again, and for small companies to actually, be able to actually raise capital through the crowd again. We were always, that was really kind of the, how America was started, really. If you go back, it was the freedom to invest in and profit from the innovation and ingenuity and invention of your fellow citizens. What happened is that more and more regulations started coming out that, when the SEC, and I understand why it happened. I mean, you had some bad actors that, started taking advantage of those freedoms. So new regulations really came out and basically said, you can't just go invest in any company. You don't really have that freedom. And so when that happened and the SEC emerged, there were just new restrictions on how companies could go about raising capital. You had to become a public company. With going public, there was all sorts of different requirements and, disclosure requirements, filings, it costs money to go public. It used to be, well, first I'll answer the question with the different types of crowdfunding. So what we're seeing today, because of those new regulations coming together with new technologies, we're actually seeing those two forces coming together to create really a whole new financial system and a whole new mechanism for finance. So, it used to be where in order for a company to raise capital, let's say after the SEC came in, when new companies would go public, for companies to go public, and companies could go public in any stage of development, really. I mean, throughout the years they have. I mean, if you look even back, it was interesting, I did a lot of studying on just the history of the over-the-counter markets. You saw a lot of companies, I'm even talking about going back into the 1960s, that were able to raise capital kind of essentially with retail investors with very, very limited disclosure. I mean, it was pretty incredible. But, you've got now what's happening is that you've got different aspects of based crowdfunding, which is like your Kickstarter or your Indiegogo. And with that, it's basically the companies that have been successful in that area have been either entertainment-related companies or consumer-based companies. And instead of getting a share of stock, an investor or some, actually really more likely a consumer, for funding that project or idea is getting some other kind of perk or reward. It could be anything from a discount to the product itself, or it could be, a vanity product. Maybe right. It's, a byline in a movie or in a book or something like that.
Yeah.
So I think that rewards-based crowdfunding, I include that under the whole umbrella of crowdfinance because I do think that it does play a really important role in the process.
Yeah.
Because I think even companies, from an idea starting on a napkin and just wanting to go out there and use rewards-based crowdfunding really for, test marketing, gauging interest. I mean, there's a lot of benefits to doing it, as opposed to going out there and raising capital on an unproven idea. At least you get the opportunity to test the market. So, and I don't, it's even just for those small companies. I think even, a company like, Apple could come out and do a rewards-based campaign if they wanted to even test market a new product launch. So I think any company could really leverage rewards-based crowdfunding.
Yeah, well, Eric Rice, he just did, he was the author of the Lean Startup, right? And he just came out with a crowdfunding kind of an approach to creating this kind of a founder's ecosystem, and used it based on crowdfunding that they would sort of self-fund the way that they were going to help each other to develop their companies and things like that. So you started to talk about something, I know it was right on the tip of your, because I think you invented this word. I would say that you invented this word, and you were talking about a whole new ecosystem for the capital markets, and that's and I may not even say it right because I think it's your word, disintermediation. Is that the right word?
Oh, yeah, no, 100%. I mean, so if we go back to talk about like that's exactly what's happening right now. I mean, we're seeing technology completely disintermediating financial services. We've seen technology doing this for, it's been used as another word for disrupting industry, but technology's truly been disrupting industries for decades now. I mean, especially with the onset, the onset of the internet. Look at the music industry, I mean, retail, I mean, everything. It's just that what's happening now is that it's finally really touching financial services in a truly meaningful way. And I think the really big game changer is, number one, the technology is advancing to a point where now it's affordable for people to actually invest in such micro increments, but we really didn't have that before. So that's one part of it. And then the second is that, the new regulations. The whole, regulatory environment is completely changing and opening up new opportunities. So that's what's really happening now. And that's where now you get this opportunity for Reg CF. Which is, I think when Congressman McHenry originally introduced his concept for crowdfunding, that was really what he had in mind. It went through a couple of changes and in the Senate before it was passed. So I know that now he actually has introduced the fixed crowdfunding bill to kind of make some tweaks to Reg CF. But that was really the idea of Reg CF was, why can't we go out to the entire crowd with an idea? We're going to limit the amount that we could raise and limit the amount that investors could actually invest in it, so they maximize their, we would minimize the loss. And that was the general idea. So Reg CF is basically, company could go out, raise up to $1 million, limited reporting requirements, raising under a certain amount, and go out there to, the general crowd, to everybody. We see that also on a state level. You mentioned before the interstate crowdfunding. Our great state of Georgia was really one of the first to adopt that, really completely. I mean, we really do have the most innovative state out there. We really set new precedents. And so, we have on the state, Reg CF, I look at intrastate crowdfunding is like Reg CF, but on a state level.
Right.
So
that's really your neighborhood things that you were talking about at the beginning. That's where, and that's one of the things I try to break it down in, is that the really great news is that there really is a platform or a type of structure for any company to raise money from whatever the appropriate audience is for them.
Right.
With all of these different variations that are out there. And so whether you know people and can do it one way, or you're the kind of company that fits into the narrow structure of most of the angel investor groups, or you're not, before now, it doesn't make it really any easier. It just means that you have the means to do it, because there's a different level of expectation of information and disclosure because of the comfort level of fear of not knowing that person, and when does it make sense to use like an interstate because you're launching something locally. It's a local brewery, let's say.
Exactly. Local retail, restaurant, perfect for interest.
Yeah, I talk about that all the time to companies that are, and I'm saying you need to, the kind of thing that you're doing, you're talking about a benefit to the local community because it's I don't know. I've had a couple of different conversations about different companies, and I'll say what you need to do is start up, go and find out what the rules are for your interstate, and make sure there's not a conflict with the federal Reg CF and what your requirements are there. And then start working your Chamber of Commerce, start working your local Rotary, start going out, learning how to talk about your business, because they're the ones that are going to be most invested in that retail thing, getting some viable jobs in it, getting some economic development in that area, wherever you're planning on, doing this, and they're the ones that are going to have the most, interest in seeing you succeed. And then as you grow beyond the borders of that city or that state, then you can look at all these other platforms to go about doing the next round of financing. And so
Exactly.
it really is something for everybody. So I want to get into a topic that kind of goes along that same thing, right?
Yep.
Go ahead. You want to say?
No, I was just going to say then, following the, I was just going to go into like the Reg D and then Reg A plus, but I think you're probably going to get to that before me. So I'll wait for you.
So that was our focus, because since you're the Reg A plus queen, I want to spend a good bit of time, because that's the one that I think, even when I go talk to financial markets and I'll be mixing around with people that are in the you would think that they would know about this, because they're on the side of that person that was an intermediary in the space of people,
right?
How they invested in the past. The whole disintermediation means those people in between, they're no longer there. You can go connect direct. And so they're all they know 506 because they kind of know that, and the Reg D, and they're familiar with that, and they're somewhat familiar with crowdfunding and a little bit of that. They're, enough that they can at least know the language. But when you do Reg A plus, you talk about that, a lot of times it's like deer in headlights. They have no idea what's going on.
That's truly where the biggest opportunity is on every level. You talk about Reg A plus. It's the opportunity on the equity side of the industry, the capital markets, the debt side of the capital markets. It's for, issuers as well as investors. There's opportunities for everybody in that space. I think that the Reg A plus is the biggest game changer that we've had. I think there are a lot of flaws with Reg D, and I think especially where I sit, because, I think that the most important thing that we need to do is really bring back the retail investors into the market. We need to go and reach the micro investors, the small investors, the underserved, the ones that, aren't right now invested in the market because they really don't know how to be invested in the market anymore. They don't have 401k plans or, any type of retirement plan. The problem, that's why the problem that I really see with 506C is that you really only it's great for an issuer that you get to mass market, but you could only accept capital, and you have to be very careful that that you're only accepting capital from accredited investor, and you have to go through extra hoops to make sure that those investors are indeed accredited. Otherwise it could blow the whole exemption.
Right, exactly.
And I think that the problem with that, it's like it's like going to, an Alcoholics Anonymous meeting and advertising, wine. It's just not fair. Like, say, hey, great, here's this great opportunity, this is going to be the next Apple or, the next Facebook. And then you get all these people saying, okay, I'm interested, I have some cash lying around, I want to put some money in. It's not for you though.
Yeah, not for you. Well, that comes to that next topic that I use a lot. I talk about it in the book a lot, and that's economic democratization of the capital markets, right?
Right.
And so I use this because it kind of dawned on me, and what I really want to accomplish with the release of this book and the information that is, pretty much given away as part of getting the book and the resources, is that there's and it kind of goes into what you talked about with trends. So you think about real estate 20, 30 years ago, who invested in real estate? It was only the most wealthy and institutions. Right. And then because of a little bit changing in the finance laws and who could qualify for financing and primary residence and all these other kind of things, and education, a big part of it being education, it got down. And I was looking at, I was actually on Eventbrite and Meetup looking for some networking things to go to this next week. And I swear, at least a third, if not half, of the events were some form of real estate education. And so everybody thinks about striving, or not everybody, but just about everybody that, thinks about, because they don't necessarily have a fat 401k, I can't depend on Social Security, I need to figure out how to invest in real estate, flip it, get some reoccurring revenue streams from it, whatever it is. I need to understand that marketplace. And they have professionals that help them in it, and they can be as involved or not as involved depending on what their situation is. Well, we hadn't had that. I mean, even through the dot-com days when, somebody asked me what made angel investors all get involved in dot-coms, and it kind of blew up when it came to angel investors. It was still this, very wealthy organization. It was still meetings that were behind closed doors. It was still
Right.
very, very who did you know kind of a thing. You had the advent of E-Trade. And so that was the first opportunity where people that were business savvy started to say, you know what, I don't have to go with the recommendations of my financial planner, my wealth manager.
Exactly
I
right.
can go research this and figure it out on myself and make all these investments. And public companies started connecting directly to their potential investors because that mediary was removed, and you had E-Trade kind of bubbled up to be the biggest and the one that had the most dramatic impact on that. And I think what you were talking about, where fintech meets regtech, we have done that now, and there is
Exactly.
still some it's still murkiness in the water of who's the good portals and when do you use a portal and when do you use this, and all that stuff is going to flesh out. But what's amazing to me, and you're much closer to it, but we were talking earlier about this article that was from February of this year in Forbes that said it talked about since 2015, there were $396 million had been raised by 32 companies in Reg A plus, but 20 of those, so a bigger chunk of them, since beginning of 2017, or as a result of that time frame, had raised 316 million. So it really sounds like the market is starting to get its legs and figure out how to go about doing this and all those kind of things. And so tell me what you see in the trends. Are we entering into a wild, wild west phase where everybody's just heard about it and now they're going to go crazy, or is there a measured progress of what we see, so there is success happening for companies that choose to do that the right way?
So I think the latter. I think two things that you said that I want to touch on that I think are really interesting. First, you talked a little bit about the disintermediation and talked about going back to E-Trade when it really started bringing the masses online and taking away, the broker sort of out of the picture. And, we've been seeing really where the trend is going. We've been seeing technology for a couple of decades now. I would even say since the onset of the discount brokerage firms back in the, even in the 70s and really the 80s, bringing commissions down and kind of changing really the infrastructure of financial services. We've seen technology really start to change the game. I mean, really, the online, the E-Trades were really just kind of the next iteration of the discount brokerage firms. Right. Brought them now down to like $7 a trade to now, to 2 pennies. So when we saw the trend was the technology, it was technology made that possible. And we saw that the trend was that technology was really starting to disrupt or change financial services. Now we're at a point, and this is where I think it's really interesting, exciting, where technology is utterly going to obsolete the retail brokerage industry as we know it. I think that you're going to see, these new digital investing and savings apps and the robo advisors. This is really taking the place of the retail brokerage firms. Retail brokerage firms, and especially because of, a lot of, FINRA and compliance rules. I mean, they simply cannot afford to accommodate small investors. It's too much of an economic risk for them.
Right. Mm-hmm.
So it's, they turned their nose up, long time ago. I mean, even some, the bigger firms, go try with even $250,000 to go open up an account at UBS. I mean, they don't really want your money.
Wow.
They want the big investment. We used to call them, when I was in the retail brokerage industry, the whales. That's what they want. And so, you're talking about, that was really when we look at the whole democratization of the space. I mean, we see all of these people that have really been left out of product. I mean, they've been left out of the growth because companies staying private longer, and, not going public. It used to be, the comparisons are just staggering. So Intel went public in 1971. It raised $8 million on its IPO at like a $50-something million valuation. That was it. Okay. That is, I mean, that's like a teeny Reg A plus deal. I mean, that's, that
Yeah.
is, that's,
Yeah.
that's minute. And, Intel, then went on, they went public on NASDAQ, and the investors that bought in Intel's IPO and held it realized, a 200,000+% return if you held it till now. I mean, the numbers are staggering. And in fact, it's pretty interesting because we did this one comparison at the time because Alibaba had just gone public, raising 25 billion,
Yeah.
crazy, valuation. Just to give you the difference, Alibaba went public with a prospectus of 325 pages, where 39 pages alone were just risk factors. And Intel went public, they didn't even have a page for risk factors in a 38-page prospectus. So, I mean, everything has really changed, and it really became so expensive. And, a company like Intel couldn't even go public now. It would cost them more money just to even put their offering together and go out marketing it
than what they raised.
They were raising.
Yeah.
So, but we really need to bring back that small cap IPO, the Intels, the Microsofts, the E-Trades, the Amazons. I mean, all these companies went public, as a small cap company, and created tremendous wealth. I mean, trillions of dollars in wealth right now. If you look, I have a great chart that I just created. It's on Crowdfund Insider. But it's a great chart that just shows like a couple of high-profile small cap companies, names that we know. The amount of appreciation, the percentage in appreciation, the amount of the trillions of dollars that they're absolutely worth now, more than most countries, most nations, the GDP of most nations, and the number of jobs, the number of people that they've employed now. I mean,
right.
So we really have to do everything that we can, I think, to bring back the small IPO. Reg A Plus is our one, I think, opportunity to make that happen. I mean, I think if you look at, the different areas we talked about before, rewards based, I look at that more as, a way of marketing, gauging demand, strengthening, maybe the bond with your customers, converting them into investors. I mean, that serves a good role. I think maybe, Reg CF is more of an angel type of, alternative. I think, Reg D or, 506C, I mean, it's just a little bit of a change on what most companies have been doing for the hot way of raising capital, the easiest way really of raising capital for, the last couple of, in most recent years, but still flawed because you can't really reach the masses. Reg A Plus is the best of everything, really. Reg A Plus gives you the opportunity to then, I think, resurrect the small cap IPO. I think you just have mentioned some statistics, and you talked about from that Forbes article. We haven't really seen, I think, yet, up until, especially when that article was written, because article was written a couple of months ago, any great success story. Well, I think we just saw what will be our poster child and the great success story go public just a couple of weeks ago.
What was that?
It's a company called Chicken Soup for the Soul Entertainment.
Oh, right. I think I remember you telling me you were working on that.
Yeah. So, I'm not working, I'm just following it. And I've been writing about it because it's, a story that I'm really excited about. First of all, I mean, I knew the brand for many years.
Sure.
So it was a brand that, I knew and loved. But what they're doing now, I mean, it's not, it's an entertainment company that, you have to look at it more of like the Netflix for doing, for social good and for, a different, it's not orange is the new black type of programming. It's feel good,
uplifting things.
To be uplifting, type of programming, which I just think is very inspiring, and they have very interesting model, everything what they're doing. But what I think what really makes it historic and sets a new precedent, and why I think it's a game changer, is first of all, they raised $30 million on its IPO. So it's the largest that we've seen so far, at a $120 million pre-money valuation. So now you're kind of looking at comparing it to those small caps of yesteryear.
Right, exactly.
Like an Adobe, or, like the smaller companies, the small caps, when E-Trade, when they had gone. So when they reached the public market. So that was one thing. It was also the first one to actually list on NASDAQ Global. So
they did their Reg A, and then because that's been the big thing, is that you've got like up to 6 months before you actually, but everybody kept talking about it being a sort of like a back door into, or a side door into the public market. And I remember when I was at your event, the folks at NASDAQ talking about bringing back their small cap, that, for the small business, the way Apple had gone public and that stuff, they had gotten away from it.
Right.
So they really did do that. They use this as the, because this kind of gives them a time frame to raise money and complete all the process of officially going public, by doing sort of like this lesser requirement of a Reg A plus versus the full public. And they were able to do that whole process with
exactly. So, they were also able to attract investment bankers, really accomplished investment bankers, in the small cap worlds, that, are really just icons in that space, and have been in that industry for decades, and, really understand taking companies public. And what they did with this deal that I thought was also interesting was that they were able to really marry the crowd, and I'm talking about on the capital raise, the crowd with the institutions. So it was, I think in many ways this deal will set new precedents, and I think it's a really important one to be watching, because I think, and also, just financially, I mean, if the company's already profitable, so,
right.
They have the financials are there, you have, the very quality banking team, and, and finance team, you have, they're all veterans, from the CEO, in the media space, to the bankers, and, Wall Street veterans and investment banking. So, I think you've got the solid team, people involved behind it, the ability to raise that, that large sum of money. I think it's an interesting one to watch. I think, it'll be interesting to see, when they start reporting a couple of quarters, and really just seeing where the stock trades. And if we really start to see this one, really start to appreciate, now you've got your real success story under your belt. I think you'll see other companies, in similar types of situations, and, similar type of, financials, profitability, branding, what have you, but able to attract, that type of banker, do a deal with where you're doing, a marrying the crowd with institutions, and really emulating this process. Yeah. So I think it's an important one to watch.
Well, and as you were talking, it made me think about, because I kind of have this thing again about this whole unicorn stuff that we see going on, and if you compare those. So here you had a brand that had sold millions and millions and millions and millions of books, right?
Right.
Has millions and millions of brand recognition of people that know Chicken Soup for the Soul. They wanted to raise money to go into a new sector, beyond books, beyond events, beyond this thing, to start being in the production on the entertainment side. Now, normally entertainment would probably not get much, because people all think of it as flaky, but they got a good foundation and they're profitable, right? So the odds of them being able to monetize that brand awareness into successful, made for TV movies or Netflix or streaming or Hulu or whatever it's going to be on.
Right.
They're going to have, and all the, foreign distribution and all that other kind of stuff that makes up for a good media entertainment company. They had that foundation, and the market responded to it, and they opened up the doors so that that average everyday investor could participate in it. And you compare that to Snapchat, right? Snapchat, millions of people use it, right? But they don't have any, so they got $1 billion, multi-billion-dollar valuation. Why did they have that valuation? Because of how much money had been put into it, not because of the old-fashioned, what's the EBITDA and what's the multiple on the EBITDA and the old ways that we've always looked at companies. It's this thing that's what makes people nervous about angel investing. It's like, how can they have such a valuation? They don't have a revenue strategy. And so you saw them go out because of the hype and because of the press that the market makers in the market did it, and then it imploded, right? It couldn't sustain it because what is it there? And it's going to sit there with all these people holding on because they don't want to lose any money if they didn't happen to be the ones the people that made money on it were the angels that, exited at that time. But, you see the difference. And this is I really am excited. We could keep talking about this forever, but we're, at that moment, I'm looking at the time here. But it's like I really hope that it continues to sustain value, that they come out with incredible content that grows their company, that, the people that invested in it, continue to see an uptick in the stock. And unlike the traditional IPOs of a lot of hype and of all the hype and all of the various inflated values, that the common sense, that retail investor that you're talking about will. I've got somebody's waving at me out my window. I think he's like trying to sell pine straw. Anyway, so get this. Sorry for that distraction. Anyway, the point is that I really do feel like we are on the threshold of, and like you said, of completely, change in the marketplace and the dynamics of the marketplace and what's the opportunities there. I'm constantly trying to reach out to companies that I think have a good solid brand that may be struggling to, they don't qualify for VC money because of the nature of their kind of company and the stage of their company, and they're too far along and they're not high tech and whatever, and they've got this kind of good story to tell, and let's go out there and let them get out there to the regular public, and do all of that good stuff. So let's get real quick, because we are at 37 minutes as a matter of
fact. Wow,
time flies. Tell people about your company and how to reach you. I didn't do that at the beginning because we just kind of dove right in. And
Sure. So you could reach me at daraalbrightmedia.com, and feel free to go there anytime. I mean, I really have a wealth of information on the site. I mean, everything from articles, everything we just discussed, really everything that's happening in financial services, in digital finance, crowd finance, P2P, really with a lot of these new investing and savings apps. I'm really just following everything that's happening in the space very closely. The regulations, everything. Great videos, webinars. I recently launched a channel, FinTech Revolution TV. I do some great interviews. We've got to get you on. We've got to get you talking about the book. So we'll get to that one too. And yeah, feel free to just, just read it all. And, if there was a way to just kind of download and all that information into your head, and, let's all really get together on these changes and capitalize on these changes, because this really is an exciting time for financial services. And, we're sitting right now, the opportunity is so enormous. It's right in front of us, and it's ready to be grasped. I mean, think of this as like, 1994, and what the internet was starting to do to just, to retail. I mean, what is finance, personal finance and financial services really, but it's, it's consumers of financial products.
Right.
So, Here we had, 2 decades ago, there was, a big moment for consumers of all types of retail, products, house goods and, whatever, all types of consumer goods. Now we're seeing that as, the product of financial services, and it's big. It's big.
Yes. So thank you very much. And you can reach me at KarenRands.co. So we're both following that thing that says, when they search for you, what do they search for you? They search for your name. So you got your website, I got mine, mine's .co, KarenRands.co. You can get information about the book on there. I'm adding to it. So I'm adding a place where we'll have all of these podcasts and video casts and things like that. And linking back through to, where you can get lots of information, and it's all about it. We just want to educate people so that they can go out and, participate in this and be the solution to their own financial future. So thank you very much, Dara, for being on the show. And
thanks for having me, Karen.
I look forward to seeing you soon.
You too.
Okay.